Something incredibly rare is starting to appear in one of the weakest markets of 2024. So why should we be paying attention to it? And what will it mean for us as traders and investors? In today's video, we cover that along with the latest retail sentiment survey reports. Are they showing fear or greed as we see coiling on the S&P, a breakout on the NASDAQ, and weakness in the smaller caps? That and more coming up in today's show. It's going to be a great one. I'll see you in a moment. Well, welcome back everybody to the Daily Show, and we've got a lot to get into, so let's start straight away together with the latest sentiment survey reports. And it looks like it's long live the bulls, the bears are dead. But there's a little bit more to go into here. While bears are showing one of the weakest readings we've seen in quite some time, as we know, these are lagging indicators. The survey results are as of Tuesday, so because we know that Wednesday and Thursday were quite strong, this may have gotten even worse. And it brings us to the most interesting level, the bull-bear spread. Are we actually at that 30% threshold to show us that the bulls have fully taken over control? FOMO is significant, and of course we should be looking more for temporary weakness into potential strength. Well, in today's video, we'll take a look at that together when we look at flows, but I want to bring up the medium-term aspect of markets right now, because why are they rallying? And why is it so important to remain probably bullish on the medium term for now with the structure that we have? Well, you've got to remember that the annual stock repurchase programs are getting even more insane. Goldman Sachs has just come out and said that they expect a record $1 trillion in buybacks during 2025. And we have already demonstrated on this channel several times, make sure to subscribe if you're interested in this type of stuff, that we have seen stock purchase programs go into overall price growth. On top of this, it looks like Wall Street continue to upgrade the EPS. In fact, they're doing it all the way through 2025 into 26, and this is on top of the GDP forecasts that are coming through from the 50 basis point cut as well, showing some stimulation of the economy. Now, that's all well and good, but what about the other asset classes? Well, of course, I said there's a rare signal. Look at the S&P 500 again in a moment, but there is a rare signal starting to appear for Bitcoin. Now, if you're not aware, October, November, December are some of the best runs for Bitcoin during the year. And of course, we have had a weak August and September. In fact, we've actually had a weak 2024, with this asset class being one of the worst when you compare it to something like gold. Traditionally, people say gold sucks. Well, of course, this year on the channel, we've loved gold, and Bitcoin has been the one that's actually kind of sucked. But is that all about to change? Well, take a look here at the Optima data leading from September technically through to October, and you'll see a huge swing that tends to happen around this time. Now, when we look at the actual breakout of the last 24 hours, it might get even more exciting for crypto traders. So I'd be interested to know down below, what is your actual target for crypto over the next kind of 3 to 4 months as we lead into the end of the year? Are you bullish? Are you bearish? Let us know in the comments down below. Now, here's where things get really interesting. And this was a stat shared to me by one of the viewers out there. So thank you very much for sending this through. And that is that if we end positively in September, which we tend not to do when it comes to Bitcoin, of course, at the moment we are, then you usually have led on to significant gains. In fact, October, November, and December have all been bullish. And it's not just a little bit bullish. If you actually look at these percentages, it's a hell of a lot bullish. So this could be one of the biggest storylines coming into the end of the year, considering that gold has moved so heavily and that technically Bitcoin should be starting to play a little bit of catch up now. So there's some promising signs starting to come out from that market. Speaking of which, is gold starting to get a little bit crowded? Well, of course, we love gold here on the channel, and I've been talking about $3,000 since $1,800 an ounce. But that doesn't mean that it's not overcrowded, and people could be starting to move some of the flows away. Now, of course, we're going to remain bullish on gold because I don't really see any reason not to. I still think it's underpriced. But you've got to remember that people will be now looking for the next big thing, and that could be Bitcoin and the crypto markets. We'll continue to cover the story as we see signs of recovery. And we've already been discussing this since 54K, but of course, if we break through 68,000 on Bitcoin soon, that could be a huge deal. Now, on top of all of this, could it also be that the biggest movement in China in a little while is leading on to potentially a renaissance for Bitcoin? Well, certainly it could be. It's kind of like a liquidity injection across the world right now with big moves going on, especially all throughout Asia. And I think this is going to also help to gain interest back into that market. But as we mentioned, what this really is not so much just the stimulation by the Chinese government, but it also is a huge amount of short squeezes. We know that people were massively short in China. We've talked about this for most of 2024, and of course it all comes through and culminates in these huge squeeze events that continue on for longer than you often expect. Why? Because China particularly trades with FOMO of extreme FOMO and fear of extreme fear. And you've seen that in the charts, especially over the last 2 years. Massive moves and big, quick moves at that. Momentum tends to be one of the things that doesn't usually pull back sometimes in those markets. Let's now talk about the S&P 500 again, though, because, of course, the bullish percent index crossed 75, which we haven't seen in a very long time. In fact, the last time we saw it was back in 2023, so it's been a while since we've had this. Now, we use this particular index to show us topping periods during the markets in 2022 and 23, and it's something that we must keep in mind again. So, of course, bullish percent index over 75. Does that mean instantly sell the market? No, but it is a warning sign that we're starting to get into the extreme overbought conditions along with that retail sentiment survey. The NASDAQ 100 versus the S&P 500 is also a very interesting overall chart. Now, of course, we've started to see the S&P 500 lead with mid-cap stocks improving, especially post-FOMC. But will we actually see a worse sell-off in the NASDAQ first? And what that means is basically underperformance of the NASDAQ. It started to improve. We'll show you a chart for that later on today's video. But it often comes down to 2 standard deviations away before starting to recover. And you've got to remember that the NASDAQ was absolutely whipping the S&P 500 pretty much all of 23 and into the beginning of 2024. So every time we've usually seen this 1 standard deviation come through, it often comes down to the 2 standard deviations, at least from a statistical standpoint. So don't get too excited about big tech just yet from the perspective of outperformance. It's likely that it could actually underperform for a little bit longer, then start to outperform again in what is a very interesting late cycle period that we're in right now. Let's talk about options and volatility though, because of course we know that volatility is probably set to spike a little bit into October. Why? Well, it's the US election year and people seem to be ignoring this completely. They're saying the Fed's got our back, there's a Fed put, it's all good. Sure, that's all good, but that doesn't mean the market won't fall 3 to 5 or even 6%, as we'll show on the charts in a moment. And you do need to remember that oftentimes VIX has actually historically peaked in October and seen market lows. Now, I don't expect either of these things to occur this year, but that doesn't mean that there won't be a pullback. So we've got to remember that that is something that could be happening here. On average, after the FOMC rate cut, we often see basically markets do these types of movements. A lot of people are saying that we're going to see small caps completely outperform. Maybe some stats show that, but generally speaking, you've got to think all of the caps will do quite well if we're in a no recession type of period. The key will be market structure. And there are some interesting signs starting to come through. In particular, have a look here at the New York Stock Exchange McClellan Summation Index. And what we're seeing it do is cycle from below 100 to above 1,000. Now, you don't get this that often, but if you have a look at the reads here, you'll notice some of these reads happen and then it goes ballistic. Interestingly, once we see this read, which we just did, 1 week later, only 40% of the time is the market up. So, of course, this leads also into whether we just saw peak FOMO over the last 24 hours for a temporary kind of sell-off into the markets. Also, 2 weeks, again, kind of murky waters, but have a look at 1 month, 2 months, 6 months, and 12 months later. Just another one of those stacked stats that's starting to show that the markets might be wanting to go into that might be bullish kind of no recession period for right now. I mean, it makes sense when you see Goldman Sachs saying $1 trillion buybacks, you've got GDP upgrades, and of course you've also got everybody, it seems like, on the street upgrading every company under the sun. Let's also take a look at this Optima data. We saw this a few weeks ago and we obviously reported on it. Again, the probability of that gap up post FOMC basically leads in here to a very, very strong 3-month run. So all of these things are kind of showing you that maybe we see some short-term weakness, but generally speaking, the long or medium term still is looking pretty healthy in terms of structure. It's just the reality of what we're seeing on the charts. FINRA margin debt also dropping down, again, not at super dangerous levels, which we often look for. So why do we talk about October being weak? Well, in US elections, it historically has been. I mean, that's just the reality of the world. And of course, if we're coming in with extreme FOMO, then you've got to be cautious of it. Is it the end? Is it the straw that breaks the camel's back or anything like that? Well, probably not. But one of the things is you've got to be aware when FOMO happens, if you get price action towards the negative side, well, that can create opportunities. And some people are leaving powder dry. Some people are looking at other markets. And of course, there's that abundance mindset we talk about on the channel here. Always more opportunities out there on the horizon. When it comes to the US 2 versus 10 uninversion, we obviously know that market structure will matter. And that's why it's so important to follow channels like this one, because over the next 3 months, we're going to see whether the market's going the no recession path, and we can keep looking at dips potentially being opportunities in what we call late cycle investing, or we're going into the recession path where we have to start questioning a lot more about what this market's really doing. Let's take a look at the largest trades over the last 3 days. We're getting, of course, a lot of dark pool trades. And when we saw these breakouts here from the Qs, the market has actually gone higher at this point. You've got to remember, though, when it comes to big, large transactions, these guys don't have stop losses. So they don't trade like a retail trader would. In fact, they sometimes get in, markets will still go higher, and then they'll end up drifting down over that period. So again, all of these reads here that we're seeing, these particular two, markets have gone up a little bit from this point, but that doesn't mean that they won't show some weakness. The last two major reads we saw on the SPY anyway ended up with a little bit of weakness after those periods. Let's also take a look at a new one that we just saw come through, which is for VOO. And you can see here the Vanguard S&P 500 getting massive transactions on it. Huge transactions. Number 2 largest transaction in the last 2 years. And we also have a number 5 up there as well, along with a whole bunch of dark pool activity and phantom trades. So what this basically means is that someone is trading heavily at the top. Are they accumulating a position for a huge new bull run? It's possible. But I actually think when you look at the data and the stats and the overbought signals from the bullish percentage plus our own indicators, it's starting to kind of point to maybe just going to, chill out a little bit and look to the rotations, look to where the markets are improving. And that's what we've had. We've had the Russell 2000 weaken, the S&P 500 basically do nothing, and the NASDAQ break out. And it's actually in line with something we'll discuss in a moment. Now, I know this chart's a little bit clipped here on the right, so you won't be able to see all these normal lines that we get. But basically, the storyline is that metals, and China have been really where the biggest flows have happened. And in recent days, you've also started to see, as you can see here, a little bit of risk on from the solar, the clean energy, and those types of markets. Now, interestingly, some banks have been suffering a little bit. And of course, that's a storyline we will continue to cover. But it doesn't look so sick underneath the hood just yet. If we do get dips at this stage, it looks like Wall Street will be trying to buy those dips into rips. Let's go over to the S&P 500 now. We do know that we're in the possibility of still an island reversal. Now, what is that? It's when the market becomes really coiled and then it would gap down. Now, remember, that's a guess. So if you are trying to make a prediction, you actually want to see it actually start to play out and give you the activation. At the moment, it is melting up. And you do not usually want to sell a dull market unless you're using some form of options technique and you know your risks. Remember, you don't know that this won't just explode to the upside, and markets love to make everyone look pretty silly. So you've got to keep that in mind. Some other things that I think are really interesting here is, of course, we've had a market that's been ripping up higher overall. And I just left on here the last 24-hour options high level, just so you can show that these levels do matter. So I put them in every day. I think it's 57.80 for today's one. But overall, this just shows you why it's so important to have these little kind of things in. This holds the market 68% of the time, and it's basically the options market predicting that these will be the kind of extreme edges for that particular session. Great to have them on chart. Always suggest you do so. Where will the bears start to get control? Well, I had a look through and I looked at some volume profile work and everything. It looks like this is the most traded zone at the moment in this range on the way up. So really, the market bulls are still in control unless we start to see that level getting taken through. And if that does happen, where becomes the next most logical conclusion? Well, of course, that's going to be around that 5,600, 5,620. And if that level came through and went worse, then probably 5,500. And if we measure that out from the highs, that would give us around a 4.5 or a 3% pullback, pretty much in line with what you generally expect. And you might say, well, I want a 20% pullback. Well, that's pretty statistically rare. So you've got to remember with the current reads that we're getting in these markets, that may not be where we're going. Let's have a look at the positive gamma versus negative gamma situation. We know that 57.60 was a very, very key level over the last 24 hours. The markets managed to hold below that level, and they went from 57.20 all the way to 57.60, which of course was the most logical kind of next step. Now, coming into the close of the week, we're looking at 57.60 still being the key level, 57.60 on Monday as well. And over the October period, you'll notice that when you're looking at where the put walls are, and I just want to mention this, the only real level getting a lot of interest is 5,500 or 5,510. So this is really showing you that if the markets do drop, we're probably going to have some form of hard cap at around that 5,500 level, which I always love when it lines up with great TA. When it comes to 57.60, you'll notice that that's where you breach into that incredible positive gamma style hedging situation, and we'll continue to watch the 0 DTEs for more info on that. I think at the moment, 57.60 though is a fairly decent resistance level for these markets. You can see it there with that call wall. If we breach it into the end of this week, well, of course, I expect that to continue to flow through to Monday, possibly even Tuesday. Let's have a look at CTAs now. Whether it's the S&P or the NASDAQ CTAs, they've started to buy the dip, and that's because momentum's been improving in that way. And also gold CTAs have really been ripping it recently, and they're super behind. You know, on the channel here, we were talking about how we were bullish on gold. These CTAs just suck at the moment. They've been very behind, and they're actually underperforming pretty heavily when it comes to 2024, considering the August dip and, of course, what we've just seen with gold and its big breakout. Let's move over to Tesla, 260, proving too much for it over the last 24 hours. This is the major call wall. We take it on Friday. Of course, it could create a little bit more of a flow-on effect. And if we look at the next week, again, we take 260, 270, maybe even 280 or open. That would be the end of the inverse head and shoulders pattern, which we'll look at together in a moment. When it comes to NVIDIA, well, it's more of the same, 120, 125. And guess where we got to? Yep, exactly the 125 level. Again, a very big, strong call level. And I would expect the market to kind of hold, if not even try to short around the 125 coming into the end of the week. If it goes through, well, that could create, again, further momentum into the next week. Now, we mentioned before at the start of this video that maybe the Qs will actually underperform the SPY for a little while. Now, remember when we went one standard deviation down and we started to see the NASDAQ not lead, it kind of lagged for a period of time. And that's exactly what we've started to see here. And this is a great way of tracking it, the Qs versus the SPY. And you'll notice that, yes, it could be in a double bottom pattern, but has that break broken out? No. So at the moment, you'd have to say that the Qs are still underperforming the SPY, and there could be some other markets to look at. If this changes, we'll update here on the charts and, of course, continue to look at it. Treasuries is also getting a lot of interest. I see your comments down below. Where are the Treasuries, Tom? Why are you not looking at the Treasuries? Look, this was the easiest trade, or in most people's opinions, coming into the FOMC. That's why it didn't work. It's too obvious. It was obvious in 23. It's obvious here in 24. And the problem with this one is if you have the right horizon, 12 to 18 months, you're probably going to do okay in Treasuries. But at the moment, it has to trap everyone. So this sell-off post-FOMC may not make sense to a lot of people, but really it's because the Fed's dot plot looks like this, whereas the market was predicting even more cuts. And of course, the market is now saying, oh, well, you know, I expected more cuts. I don't get them. Okay, we'll sell off. Now, do I think we can get to 106 in the future? Sure, but it's not really a trade. It's more of a position buy, or for some investors, maybe they like it from that perspective. Let's move over to the US dollar. Continues to remain trapped within that anchored VWAP low, up, down, and all around. We'll report on this at the market close as of the weekend video, because that'll be more important. But let's have a look at the metals, because this is really where we've spotted together, good work guys, on these metals. These metals were the teller here that markets were improving, and particularly China was starting to show. Remember, metals, copper, and China somehow miraculously predicted this massive squeeze, and of course, big news coming out of China from the liquidity side before the event ever occurred. this is why you don't listen to the narratives and instead you follow the price action. If you don't take anything away from the last 2 weeks, try to start thinking about that, because these were all really showing up and we've actually been very consistent on it. So go and have a look at those for the last 2 weeks. Now, downward channel line here for iron ore is being broken through. That's a good sign for continuation potentially in China moving forward. And we do need to remember as well that copper hit our target and then blitzed it as well. So copper really showing signs of improvement. And what this is world stimulation. Effectively, the global markets are starting to smell that there's a bit of growth coming around. And that's why copper is starting to improve. So yeah, contrary to what most people believe, copper's starting to improve. It has actually been for most of 2024, and that's not a bad sign when it comes to the bulls and what they expect over the next 3 to 6 months. Let's move over to gold now. It's continuing to grind higher. I think it's a bit overbought on the chart, but that doesn't mean that you want to sell it if you're a medium long-term holder. It's still in a massive upward trend. So yeah, what do we see from gold? Well, at the moment, it's up until it's not. And we will, of course, look at the key levels should we get pullbacks. I don't think there's much point looking at it up in the highs. The one that's probably more interesting is silver. We'll check out the weekly close for silver and see how it looks. But at this point, it looks like silver could be moving on to that 34 kind of 20 plus that we've talked about in quite a few videos now for a while. And this has been a beautiful replication trade. Silver still has a lot of catching up to do. Remember, the silver gold ratio is super far behind. Now, this is the tough one, oil. Now, we know that oil is really weird into US elections. It's pretty manipulated, so you've got to be a bit careful. I wouldn't be surprised if oil takes a new low before it starts to rally again. I did talk about this. Obviously, there was a possible little day trade buy here that ended up failing this week. So, of course, there's a failure. And I don't like buying it down here just yet. I'd actually want to see the market show a V. The thing is, you don't want to generally buy dips on very sell-off or very nasty assets. Remember, we went bullish on oil around here. We went bullish a little bit in here, and we dropped that position around that point there. Now here, I'm going to say question mark. Is it selling? Yes. Is the trend still down on the daily? Yes. So you've just got to be careful. We do know that oil may be trying to stop a very heavy short. So that could be forcing through a new low. I'm going to go back to this one. Of course, we'll look at it together. Tesla moved into 260, found it too much resistance on the call wall and sold off. I don't think that's necessarily a horrible negative for Tesla overall. Remember in October, I think it's the 10th, they've got the event that Elon's talking a lot about and making a big deal about. It could be a buy the rumor, sell the kind of fact here on Tesla. So I would actually like to see Tesla buck the trend, move towards 270, 280 into the event itself, and then potentially even sell off afterwards. You know, Tesla loves a good ramp, and yeah, a lot of retail traders will be talking about it, I'm sure, on the weekend and getting hyped for the event and possibly buying some calls. We'll see. NVDA, what's going on there? Well, as we mentioned, 125 was a bit much for it because that's the call wall this week, and expect it to kind of like maybe go down a little bit into the Friday. We have to really reassess the S&P the most there. And then we move over to HSI. Is it overbought? Yes. Could it go higher? Yes, it could. It certainly could. It's approaching 20,000, which we know is a massive psychological zone. But again, this is where we're putting it in perspective. China fell 80, sometimes even 90% in some stocks. It's just making some of the recovery. So when you get these types of squeezes, they can go longer than you expect. Could we go to 22K plus on the HSI? I think that's very possible here, and we'll continue to track it. Again, I like the encouraging signs from iron ore particularly. Very linked markets, and we've shown that several times before. Aussie 200 loves that type of stuff as well, thanks to the miners improving. We're going to see Aussie 200 probably keep climbing up for a little bit. And if China's doing stim, especially going back to the old economy, that's good for the iron ore stocks. So Australia likes red dirt, and it's doing all right. For all the Australian viewers out there, for the moment, it looks like we could be moving towards 8,800 over the next coming months. US 30, I don't know. It's at the top. It seems to be a bit coily as well. Maybe it'll do a big breakout and go ballistic. It's a dull market. It's slow. That isn't usually a great sign to short unless you're using a multi-week option. And at the moment, the trend is still up. US 2K, obviously weakening. I've got an alert up here. You can set that one if you want 2280 plus. If that happens, good times for the Russell. At the moment, it's just kind of pulling back a little bit. And then we've got the NASDAQ. I thought it might hit my second res over the last 24 hours and hit that 20,400. Everyone was feeling extreme FOMO over the last 24 hours. I would say that was probably peaking some bulls. And then we saw some selling. Let's actually have a look underneath the hood together at this particular market. You'll notice here, again, still the trend is up. There's nothing you can really do about that. In terms of where the major kind of buyers are, they're probably not going to be around until 19.8 or even 19.4. So I'm going to use the S&P 500 as we often do. And if we see sell-offs, then of course you can time it in with the NASDAQ. But I would say that for now, the bulls could be still in control to 20,400. A little bit of a strange sell-off there. Again, when you're looking at all the charts and we go even smaller here to the 5-minute, you'll notice that it started strong and then it gap filled to the downside. And there are quite a few gaps coming through, and then it found a little bit of a bounce. So that's suggesting that if the bulls are still in control around in here, 20,000, maybe 50, there could be some buyers that maybe come in on the small day trade side. That's if you want to go in. I think it's probably a bit dodge at the moment in terms of these charts. But yeah, at the moment, you can see here, the bulls got control near the end. So maybe some pullback to 2050 if they want to go towards 20,400, which seems like the most logical target at this stage from the bull end. Now let's move over to Bitcoin. Yeah, not a bad chart. I mentioned this to our private community. We were talking about it. That is a good looking flow chart. Very dull, okay? Probably people trying to short it. I don't like shorting dull markets. You know, that's one of the rules. And you can see here, we actually just breached 64.5. which of course is one of my favorite zones to get through. So now that we're getting through there, it kind of points towards 68. And with the data and the stats that are starting to project into October, November, and December, I tell you what, it's not too bad. We'll talk about flows in our weekend video. There have been some upticks in flows and ETFs. Not huge, but they're starting to come through. Little retail traders coming in. And obviously, if the big guys get involved, it could go ballistic. Do remember, at the moment, we have a downward kind of trend line here. We've got obviously a series of lower highs and lower lows, but that's kind of starting to switch. And as we mentioned, 54K was a super hold. We saw a breach here and we started to get even more bullish. And this is just another sign in what looks like a fairly decent progression for Bitcoin. Ethereum is quite a lot weaker, which is to be expected. The alt's not doing so well. It really should be already through 2760 at this point, if not even better. But that's how it is. It goes Bitcoin, Ethereum, and then the rest. And we've seen it many times play out. Core PCE on Friday, guys, 8:30 a.m. New York time, so make sure to check that one out. And obviously, if you enjoyed today's video, make sure to subscribe. Also, a few more spots left open for Sydney in our trading events, completely free. So if you're in Sydney, make sure to sign up and come along. The set date is 30th of October, so that's going to be open for a little while. Melbourne is basically full. So yeah, if you want to put it in, I can probably squeeze you in, but basically it's pretty full, so it's good. And we'd love to see you guys there. Otherwise, sign up to the newsletter. We'll have one coming out early next week covering all of the latest information. Links in the description. Thanks, guys. You have a fantastic day. See you next time. Bye.